Good afternoon, everyone. Thanks for making it here after lunch. This is the session Mobilizing Finance for Energy Efficiency, and not only this is my favorite topic, but if many of you noticed during the panels earlier today, energy efficiency came up rather often in the discussions earlier today. And so I have an amazing lineup of speakers next to me who are going to do the heavy lifting, but it's going to be fine, I promise. We have this way, Grace. So Grace came from furthest away on this panel. She is coming from the Clean Energy Finance Corporation, which is Australian government's green bank, and she works on consumer finance. She's going to tell us more about that a bit later. There's Mr. Dirk Bartsch, head of ESG from Berlin HIP. This is a financial institution not only with 150 years of history, but also a signatory of the Principles for Responsible Banking. We have Mr. Luca Bertalot, who is a representative or Secretary General of the European Mortgage Federation and European Covered Bond Council, which is a mouthful, so apologies for botching it already in the beginning. And Luca is also, or the EMF, as we're going to call it from now on, is also a member of the recently founded European Energy Efficiency Finance Coalition, co-convened between the European Commission and UNEP FI. And last but not least, we have Nathalie Larrousé. She is Associate Director at the European Bank for Reconstruction and Development, working on green capital markets. My name is Bachurova. I'm going to be the moderator today. And I'm going to start right off with Grace and her organization, which is supplying finance for investors all around for different activities, and at the same time supporting the Australian government's ambition to cut CO2 emissions. So let's start with your perspective. How does Australia do it? What has been a successful financial mechanism to incentivize households, investors, private sector to actually go and invest in energy efficiency?
Thanks, Anna. It sounds like a big task. So I thought I'd explain it by sharing with you what I've done over the last 4 years, and Luca really helped me. So I'm really excited to be on the same panel with him. So back in 2019, I started looking into creating a green mortgage in Australia. That's because back in 2017 and 18, we started seeing a lot of green residential-backed mortgage securities coming to market. And they were basically just green mortgages that the financial institutions themselves deemed green, and there were no benefits to the end household. So I could see that there was a missed opportunity there. So I set out to establish a real green home loan where the end household will get benefit from energy performance, and we can offer discounts to the loan, to the mortgage, to the household. And what we proved with that program was that with a really good discount, you can actually get consumers to take up those energy improvements to their house. And even though it was an effort for them to navigate what type of energy upgrades they needed to make, the early adopters were able to take advantage of the really attractive discount to make those upgrades. But where we came into some barriers was that after these early movers, it became really clear that a discount was not enough to get consumers to take action. So here comes my current fund, which is $1 billion Household Energy Upgrades Fund, which I roll out green consumer loans to help incentivize households to make upgrades. And what we've learned is that we need the financiers to actually help the consumers navigate that complex home energy ecosystem. So we're now seeing an innovation in that space with a lot of fintech and technologies-based home energy advisors providing a portal for the household to actually seamlessly calculate how much energy they can save and what type of technologies they need to install, and also to engage the right installers to help them make those installations. And finance is just the last part of it. And with that and a really attractive discount, we're now seeing a lot of uptake and interest in households. And because of the success of that sort of tie-in with technology providers, the private sector has really stepped in to co-finance. So I was sharing with the panelists earlier, I'm able to get one-to-one leverage. So now I've rolled out about $345 million worth of investments, but the actual program size is $650 million. And even though I'm offering a discount through the government to the investment, I'm able to get even bigger discount from the private financiers. And that's because they all want to say that they're the first bank to tap into my fund. So they're competing against each other, tap into my fund, get the biggest investment, and so they're offering really big discounts. So I think ultimately, in order to make energy efficiency for households success, you need to think about how to help the household navigate the complex system, and finance will come later.
Great. So you're going to see today's panel will offer a lot of diverse regional perspectives. So moving to a range of markets, maybe here with Nathalie, who represents the EBRD, which covers about 40 countries from Morocco to Mongolia, all challenging markets, emerging markets. What do you do to stimulate demand for energy efficiency investment and finance?
Yes, thank you so much, and thank you very much for organizing this panel. Very interesting. It's a pleasure to be here. So I wanted to give a bit of perspective to what we are doing here at EBRD to stimulate that energy efficiency demand. So I will look at, take the perspective and focus maybe more on the SMEs lending. So EBRD is working, as you mentioned, in a variety of countries. They all have very different specific economies, and we are targeting and tailoring our supports based on what matters and the different type of economies that we are facing. So we are active, just to give a bit of an overview, in Central Asia, Caucasus, Western Balkan, Eastern Europe, and the North African countries. And they have all their own different specificities. So what we created, it's been about 20 years that we set up a program, a financing program, focused on developing and facilitating financing of energy efficiency. That started in 2006, sorry, where we were exclusively focusing on supporting partner financial institutions in those countries to deploy financing to fund specific energy efficiency projects tailored towards SMEs, households, and some large corporates as well. Now we expanded that program to a wider range, which is also focusing on resource efficiencies. So we're looking at water, for instance, and other type of efficiencies. And the program is basically tailored around several pillars. So one is capacity building. So what we are looking here and is bridging that gap of knowledge that we are facing in those slightly less developed countries. So we are providing for tools to support both the financial institution locally and the MSMEs or SMEs to develop and access knowledge around the energy efficiency products that are there. I will develop a bit later what are those products, but things like a Green Learning Academy or a Green Technology Selectors that really support and bridge that gap. The second aspect, the second pillar, is technical assistance. And those, again, are very much tailored to the different regions we are working on based on the economic make. So we have a consultant coming, really working on gap analysis, understanding what are the needs from those SMEs, working with them, implementing projects. So the finance is coming, but it's not coming alone. It's coming with that support to implement and select the right technology. It makes it more manageable. It improves the quality of the projects and create bankable and sustainable markets for energy efficiency. And the whole goal of those type of financing frameworks is very much to create that demand-led energy efficiency market in each of those regions and create that that demand and that understanding of what type of products are available. Obviously, this comes with financing. So we are providing for some loans. We have some grants that are attached to the performance of those loans. And that creates the bridge between that lack of financing and lack to access to finance and that knowledge gap that we see in the different countries. Maybe a bit of regional perspective. So, for instance, we've been working a lot in Turkey with industrial SMEs, helping them to select the best technology available there. Or we've been working also on agriculture, energy efficiency, and depending, obviously, as I said, on the regional needs, we will tailor the approach and the support.
Thank you. Energy efficiency is indeed a cross-sectoral topic, but I want to dive a little bit deeper now in real estate finance, and starting with Luca and the European Mortgage Federation. Tell us about some of the instruments that you apply to stimulate market for energy efficiency, to make it more easy, more accessible, more understandable maybe. Let's start there.
Thank you very much, Anna, and allow me to thank, UNEP FI and EBRD for the work that you are doing. We have to explain to more than 2,000 banks that they have to change their business model, and changing the mentality of the banking sector is the only way to change the mentality of a million of citizens. I always say to the European Commission, if you convince the marketing department of a bank, and I am very honored to have the greenest bank of my members here, and you can sell whatever you want. You know, the banks are happy to change the mentality of people. So here we have to create a kind of hierarchy in governance on how we have to change the paradigm, and highlighting the business model and the opportunity behind this. We are an organization, as I said, umbrella of 2,000 banks. So what we are trying to do is to create initiatives that are moving the banks in the same direction. In Europe is also, I think, the backbone of the single market, because the mortgage market are still very national. I'm sure that you can not buy a house in France and get a mortgage in Germany. It's still not yet possible, and our dream is that one day we will have one single market also for the mortgage market. And this energy efficiency for me is the best possible opportunity to change the market and build hope for people. Because the house is the place where you grow your kids, but it's also the place where you build your opportunities. I was born in Rome. I spent my last 20 years in Brussels. And I love Brussels because it's the city of the biggest opportunity of my life. But without the chance of buying a house in Brussels, you cannot build your future, you cannot build your house. And I think that we have to link the energy efficiency also to this idea of social lift. But we have to give the instrument to the banks. And what does it mean? Well, we have to change the regulation in an intelligent way. I think taxonomy did a lot in Europe, but it's not enough. And then we have to be humble and think, that's why we need the United Nations, that we will not fix the energy efficiency problem in Europe, where only 7% of the global population lives. It's not changing the windows in Berlin, in Stockholm, that we will fix the problem. No, we have to create a scale-up factor, where we will create a business model where people will make money, will make interest in changing the model. So we have done an energy efficiency mortgage label, obliging all our banks to have similar disclosures. Because if you have IT models that highlight, for example, the energy performance certification, you attract new investors on your balance sheet. I think Dirk will tell more about this. If you have more investors in your portfolio, you are more financially stable. You rely much less on deposit. So your funding cost can be reduced over time. Your rating can be improved. And the bank will change the IT system, because at the end of the day, it's only data problem. And to change an IT system in a bank is quite costly. I mean, Dirk, no? I mean, how much? And when Dirk goes to the CEO and say, by the way, we have to spend 100 million for changing the IT system. The question is why? Yes. And why we have to change? And he needs to have EBRD, UNEP FI, a lot of institutions that tells that's the right thing to do, because otherwise Dirk will be a crazy guy in front of the CEO. And you need to justify it. So this is the game that we are doing all together. And we have to build trust in what we are doing. And we have to change only where is needed. Also, allow me to say something. I love taxonomy, because taxonomy is changing the mentality. But we have to fix a lot of things, because, I mean, otherwise we are asking useless things. We have to create a market taxonomy that will help banks input money rapidly in the market, not creating problems. And I think Mario Draghi has helped in shaking a bit the tree in Brussels, saying we have to revisit something. It's not only energy efficiency, there are a lot of things that we have to revisit, but I mean, anyhow, we have 5 years to change things. But that's the idea. We have to make a market revolution, and we have to give a simple solution to banks to move capital in the pocket of normal people to make energy efficiency investment. Thank you.
Well, I think I should have let Luca moderate this session. He's doing a great job. Before we move to the more tricky questions that I have for you, I wanted to give Dirk an opportunity to tell us more about Berlin HIP. Their core business segment is commercial real estate finance, and they have the ambition to make their entire portfolio climate neutral by 2040 at the latest. If I read that.
Not 2040, 2050. By the latest, so 2045. But
okay, well, in a few years. So, yeah, are you on track? What is the recipe you're following on that track, and what is the role of energy efficiency finance on that track?
okay, thank you very much for having me here. And Luca, you set the bar pretty high for me now, and expectations are high. So we are a mid-sized commercial real estate lender, focusing obviously Germany, France, the Benelux, as well as Poland. And 35 billion assets on the balance sheet. It's not that big, yeah, but roughly nearly 40% it's green bond eligible assets. And that's very important, asking or giving the answer of your question where we're aiming at. We are currently stand at 27 kilogram carbon emission per square meter per year. We track that on a quarterly basis, and the target is a 40% reduction to 19 kilograms by 2030. And to come to that point, I think that's a long history, and ESG, every time I say that, is a journey, and actually the journey starts in 2015. We as a Pfandbrief bank has been among the first who issued a green bond. And issuing a green bond means acting with investors. You said it was rating agency, they are quite demanding, they want a yearly reporting, you have to have the data in-house, and starting writing a green bond framework. But it's only the passive side, the refinancing of the bank. And now you have to go to your nice guys in the distribution. They have to be trained, they have to go to their clients and make them aware, you know, the rules are a little bit changing over time, and I will come in a minute to that, what that meant for us, and writing a sustainable finance framework. And starting with the topic, setting targets and so forth, we had a big program in 2020, and the first result out of that has been that we started a decarbonization project 2021, and we, as I said, we implemented that in 2022, and we finalized it this year in the second quarter. Why is this huge time gap? And actually the case has been we changed the pricing mechanism. So every loan, what we said, you can only get a loan with us if you have an energy performance certificate. So we know what is the carbon footprint of that specific real estate. We look at the transitional risk, we look at the physical risk, and we implement an ESG score, how the lender is performing. So that's something what we have decided, and that's part of every loan which we give out, and we incentivize that because we have a good refinancing, we have a nice mother with a good rating as well, which is supporting us, Landesbank Baden-Württemberg, and we passed it also, this kind of benefits in giving green loans at a more attractive price. In the end, it's not like that you want to have a nice return. It's very much in the first hand a kind of a risk framework, because we believe that those kind of assets have a better risk profile going forward. The easy thing is that you tackle that mostly with a new business coming up, with new projects, and we come later on that. I think it's the next topic. It's much more difficult, trickier with the existing real estate portfolio. And with this discussion you have with your clients, you try to influence them that they have to move. They have to spend money to renovations, that's the right word, and that costs a lot of money, and we're also asking that they're going to change from using oil and gas as a heating more to renewables, or a kind of district heating, which is a common topic in Germany as well. And there has been a nice topic as well in Germany. It's the heat pumps. It's a miracle by the latest government, but it's still something which is important, putting these heat pumps into work and use renewable energy. And all these kind of small measures are helping in the end.
Thank you, Dirk. You mentioned risk several times in your intro remarks, and energy efficiency finance. We heard some examples of successful implementation of energy efficiency finance, but the risk remains. Are these real risks? Is it more a risk perception, or are there misconceptions about risk? What are, in your respective areas of work, bottlenecks or risks that prevent additional scale-up of energy or faster scale-up of energy efficiency finance?
For us, this is the core topic, the risk measurement. We look at physical risk. We work together with Karl, is one of the subsidiaries from Ergo Group belonging to Munich Re. They are just coming up with a new model. It's even more clearer where flooding or high water marks are. That is also important to give out better prices. And as well, as we are a Pfandbrief bank and covered bonds, we need the insurance. Otherwise, we cannot issue that or put these kind of assets in the covered bond pool. And that's from tremendous importance for us to understand what is the physical risk. And the transitional risk is to understand what the landlord wants to move on that way, and what kind of assets they have or cash flow available, because we're not just lending out for the underlying. For us, is more important is these kind of real estate properties, are they attractive for the tenants? And there we have to distinguish with two markets. On the one hand is living, and the other one is the main offices, the commercial side. And there we're currently facing, like the industry, big problems that you have on the living side. You have to have the affordability. There's a demand is much higher than what you can get in Germany currently. And on the offices, space is other way around. And when we see new properties coming in with energy performance targets, A, great ESG score, also social score, so everybody wants to move there, and then we lack. Maybe we have cities, Nuremberg or Bamberg or something like you never probably heard of here in Geneva, but they are not really attractive for one or the other smaller investor. They are focusing in the main places, and we don't want to have stranded assets in the end in our balance sheet.
Grace, is that similar or very different in Australia?
I actually look at risk slightly differently. In that I work with financial institutions, and to them, they see this huge transition happening before their eyes. It's coming inevitably, and on their balance sheet, mortgages is a huge asset class on their balance sheet, so they know there's a big opportunity to finance that transition. But they're all really scared, and just as Luca said, should I spend that amount of money to change my IT system? Will there be enough take up that it's worth my money? So when I talk to banks, there are 3 different types of responses. The first one I encountered 2 weeks ago again, and they basically said, unless it's going to make me a lot of money, and unless it's $1 billion or billions worth of dollars opportunities, I'm not doing it. and I'll just lobby the government to change the building code instead. So these banks are missing out on the opportunity that's before their eyes, missing out on the opportunity to train up their workforce. So that's the risk. The second type of banks is, I really want to do it, but I don't want to go in all in, I'll just go half in. So they spend some IT money, they offer some discount, do some marketing, but they really don't help the end household navigate that consumer energy journey. So what I end up seeing is that their program is not very successful. There's very little uptake, and there's a lot of complaints about the process being difficult. So although these banks have tried, unless they go all in, actually it backfires on them. But the third case are the ones who are successful. They go all in, they spend the IT money, and they do marketing and a tie-in with these specialists to help their consumers, who are their own customers, to green up the portfolio. And as an example, recently I rolled out a $75 million program of my investment, total program size $150 million. That bank spent $5 million in IT costs, plus onboarding this private company to help their customers green up the homes. And I'm only offering them $1.5 million in discount. So net-net, they've spent a lot of money. And what I'm seeing now, within 2 weeks, they've managed to originate the size of portfolio that other banks have taken 3 months to originate. So doing it right and spending that money will actually mitigate a loss of risk for you, but it's just having that trust that you will deliver if you do it properly. I think that's the biggest win.
And as far as I'm aware, the EBRD has a similar approach. The building the trust is in a way translated into building capacity of
Yes.
the financial institutions, which are going to then lend on to the final borrower. Tell us more about specific examples, maybe one or two, that you take these public donor funding to do capacity building, technical assistance for the banks, which then leverage their finance, private finance, and ultimately how that helps develop the markets for energy efficiency.
Yeah, absolutely. I think this is the main challenge we have currently in our countries, is that financial institutions are very skeptical because they can't really measure energy efficiency, and they don't have reliable standards to work on those type of projects. So we do a lot of work to first educate. So we have those, what I was mentioning earlier, a Green Learning Academy that genuinely just educate the financial institutions about what type of product and why energy efficiency, and looking at this, those climate risks. So climate risk awareness is important when assessing their lending toward SMEs. A lot of them there is a true awareness issue about what the risks are, both for the financial institutions, but also for the end clients. So we really work at both levels, enabling those banks to very much assess that risk better, and also the MSMEs to understand why is it good for their business to do this type of financing. And so coming to your the technical assistance, I think one really good example of what we developed is that Green Technology Selector. So it's basically, we call it an Amazon for energy efficiency. So based on the country where you are operating, you have access to an entire portfolio of technologies. It can be anything from, like the type of lighting, the type of machineries that you can find that are more energy efficient, agricultural technology. So there is a huge range of available technology with reliable information, and that provides for a given country the best available technology in place that is accessible for SMEs, that give the technical criteria and the energy efficiency and energy savings that you can expect by introducing those technologies in the businesses. And so it gives the PFIs the confidence and the comfort that by financing such improvement and those specific technologies, there is actual measurable results. So we are here to support that knowledge gap, that technical assistance, and in turn, what we developed is those products that are incentive products, where those technologies are chosen, there is an incentive for the MSMEs in a financial incentive, which is financed by a grant, basically, to adopt them. So there is this risk mitigation and risk awareness that we are working on at EBRD in those regions.
And the green technology selector is country specific?
Yes.
So case in point, there was earlier, in an earlier panel, someone said local action for global impact. Well, there is a good example. Luca, you mentioned your EMF label. Is that a tool to address risk? Is that a tool to increase awareness? Is that the way to skyrocket energy efficiency finance?
Yeah, I mean, we hope so. I mean, I think here the game is creating a scaling up factor for the industry. And I think capital markets have an important role to play. So a common label can facilitate disclosures, as we said before, but also can help banks in giving a target of what they have to change internally. So it's a simplifying tool. It's a meter that we want to offer. And we hope that around this we can build capital markets finance for three major areas. Because I would like to say the problem is not on the mortgage business. If we look what the European Banking Authority analysis has done last year in March, if I'm not mistaken, they have calculated the green asset in the banking system in Europe. Mortgages are the greenest asset in Europe with 11% of green asset ratio. To give you an example, the small medium enterprises have 0.5 of green asset ratio. So I'm asking myself, let's suppose that all my banks start to pump money into the market. Do we have enough SME to retrofit 200 million of dwellings? Because this is the need in Europe. So we have to work together, hands in hands, not only banks, not only mortgage industry, but SME, as you were very correctly saying. But allow me also to say the public sector. So we are developing three instruments, which is of course covered bonds, because we love covered bonds. One day they will give me a German passport, and I hope so. I hope only for merit on the. But I mean, the covered bonds can really help in financing public sector finance. Germany has been rebuilt and reunited by using public covered bonds. So we believe that public sector can help in cities in financing neighborhood retrofitting, infrastructure. For example, the European electricity grid will never support all the solar panel. So if we convince all of you to make a solar panel on your roof, it's not enough to fix the problem. Because, I mean, the infrastructure in Europe is not ready to cope with this. So we have to make huge investment. So the game is very complicated. And there are no simple solutions to complex problems. I mean, we have to be very frank with people. And we have to work hand in hand. Banks can give a strong help. We need a lot of institutions that can support us. But we need also government to make changes. For example, I think it's also a question of a level playing field. We cannot rely on public support. I would like to explain why. Because public support or subsidies are not giving level playing field. A citizen in Athens doesn't have the same chance to have a subsidies of someone living in Copenhagen. And that's a problem. Because Europe is based on level playing field. So we need someone coming from capital markets, for example, taking an asset in Athens, put this in a balance sheet in Germany, maybe Dirk can help us here, and finance this via Germany and finance this. This is level playing field. So we need to build the infrastructure, and the label is the pillar around which we can build a new ecosystem that can really move 40% of the European GDP is coming from mortgages. So we can really move a scaling up factor. Sorry for taking 2 minutes.
And I thought I should have given you the role of the moderator, because the next question is actually about the demand. You said, okay, let's have all that supply of millions of euros and dollars for energy efficiency. But what are the factors that you are seeing affect demand? What can you as financial institutions do differently to increase the demand, to change the demand trends that you observe? Maybe Grace can start with the residential sector, and then we can do a round again.
Yep. So in Australia, different to what Luca said, we have a lot of solar panels. So 16% of homes have solar panels, and some states have 30% solar panels, to the extent where they were able to power 80% of a day's electricity using their own generated energy. So we have a different problem. And the reason why we have so many solar panels and such huge demand for renewable energy is because we have quite a lot of blackouts. So with climate change, we've got a lot of wild weather events, and that usually destroys the transmission lines. And households have been sick of just losing power and either heating up in their homes and being told to actually minimise anything that they can use because the electricity can't cope. So usually whenever we see a blackout event, people will go and buy solar panels and batteries. So usually we see a lot of demand in that way. And also with energy prices going up and the energy grid not being that reliable, people are just installing anything they can to basically self-generate and de-risk themselves. So we're seeing a lot of demand for that reason. And as a result, the governments have been rolling out a lot of incentives, grants and education programs to help people understand what type of technologies they should install and what is the fair price, because there's a lot of price gouging in Australia with poor quality imports coming into Australia to be installed. So we're seeing demand driven, unfortunately, because of climate change impact, but it's good that people are also now installing batteries because our grid is not coping with so much solar going into the grid. So we're seeing demand, and what is helping with increased demand is actually great consumer education from the government so that people can have that level of trust. And we're now seeing the next best frontier, which is virtual power plants, where people are comfortable enough to give up the control of the devices to help balance the grid. So I'm hoping to see more demand from that front.
And Nathalie, what about the demand of SMEs in emerging markets?
So for us, it's again very much linked to knowledge and misperceptions. So for instance, like something that struck me is when we talk to MSMEs or SMEs in our regions, and we talk about energy and sustainability, they are thinking straight away renewable energy. So they're going to install like a lot of capex. This is a capex. This is the cash flows. This is the results. It's tangible. Energy efficiency usually is completely forgotten or comes after. But what we're trying to explain is that first of all, you want to make your business more energy efficient, reduce your consumption needs, and then you can move on to renewable energy. So we do a lot of work with very targeted marketing campaigns in each of the regions. It can go from targeted campaign using specific agricultural process, or looking at manufacturing process and helping those industries to understand how they can reduce their need for energy, and then we help them with renewables. So a lot of that misperception is one of the big barriers when it comes to financing. And of course, once we worked with that and with the kind of knowledge sharing that we discussed before, those projects are a lot more bankable. And that demand is created, that understanding is there, and the banks are a lot more willing to actually support those projects and finance them. So I think that's one of the good examples of what we can see as demand hindering.
So it strikes me that we're talking about energy efficiency since the 60s and 70s. Okay, now we're doing targeted educational campaigns. Don't we maybe need some kind of an innovation in the energy efficiency space? Something different? Have you come across concepts or practical approaches, something in theory or something in practice that you want to see more? Let's get creative, Luca.
Well, I mean, we are, with our initiative, which is called Energy Efficiency Initiative, working on two sides. I think that demand, let me try to be diplomatic, doesn't exist. Let's be clear. I mean, consumer demand is very low. Most of the banks are not doing, they try to make green product, but the demand is not there. For several reasons. Instability in the subsidies. That was the case, for example, in Germany. I was very surprised. But I mean, KfW, they intervene. And once the consumer is disappointed, when you breach the trust, they never come back on that. So stability on the policy of energy efficiency is very important. And unfortunately, stability, the politician, is not the best word. Especially when you have to have a mortgage of 30, 20 years, you need something which will be justified for 20 years. So demand is a very weak point. We are working, for example, we have hired a Danish company specialized in nudging. I don't know if you know nudging, what it is when you enter in a supermarket, they put you all the healthy things when you enter. So you buy your salad, your carrots, but Nutella is very far away. But you will go back home with Nutella. I mean, so they are these kind of companies trying to nudge consumers and try to understand to what kind of instinct the consumer they react. So we are studying this with our banks to try to stimulate the demand. Then, as I said, we try to make the public support more stable. We need to invest in infrastructure. We need to make this possible. And I think that there is one big solution. Allow me to make a bold statement. We need a federal budget able to sponsor the Green Deal. Because as long as we will be speaking about a Green Deal without the money, is a difficult game. I mean, if you don't convince the people that there is a federal government and a federal budget ready to support what we are doing, investing in small, medium enterprises, is investing in infrastructure. Most of the countries have a regional database about EPC. What does it mean? That the bank has to go to every single region and ask, do you have the EPC of that thing? You can understand it's impossible to make a green asset ratio in this condition. So we need to remove all these bottlenecks altogether. And we need the political willingness to tackle this seriously with a federal support to remove this. This is what we are saying to Brussels, that's what we are saying directly to Ursula von der Leyen, but it's a bigger political problem for us.
Maybe I can I add?
Yeah, of course.
So absolutely right observation. Yeah, the demand is pretty low. As I said, in 2021 we set up the Sustainable Finance Framework. We have a taxonomy-related loan, transformational loan. I will not say the numbers because they are articulating against what we have done so far. And the key thought I would like to add is everybody knows that they have to invest. They know that the regulation, the CSRD, everything is absolutely clear that you have to move. But why they are not moving? And from our perspective is because if you invest, as an investor, you want to have a return. And that's currently very difficult to achieve in Germany in the real estate class. Besides other risks involved, I think that's the key issue when you want to spend in housing, that you have caps on your rent, and investors are uncertain if the regulation, as you said rightly, Luca, will be changed over time. They try to refuse, wait, and see what the next legislation will does or not.
I want to give a chance to the audience who has been incredibly quiet and patient and came here gracefully on time after lunch for an opportunity to ask a few questions. While you think about what kind of questions you would like to ask, I'll give you the floor for some closing remarks. And to prompt you for that, I want to bring in a quote from Archimedes, who said, "Give me a place to stand and I will move the world," when he was explaining how a leverage can multiply force. So if you were Archimedes and if you had the power to multiply your force, what would you do in supporting energy efficiency finance after having discussed challenges, risks, demand? What is one thing that you would want to leverage in your work to change the situation?
Well, with the programs that we developed, we currently work across nearly 30 countries, and we engage with 170 financial institutions. And as you noticed, the work we do is very detailed and in-depth and local and specific to SMEs and on the ground. So it's more, basically more of that engagement, more of that mobilization, more of that knowledge sharing that we need to really go on the ground and make a difference. Because I mean, the taxonomies and all those discussions are extremely useful. We are as well investors in green bonds. That has been a fantastic leverage to bring standardization, to bring transparency to the market, to mobilize also international investors to those more local projects. But there is such a huge need, at least in the country we're working, to be local, to be dedicated to that knowledge. So more of that knowledge sharing and capacity building.
Well, I think we have to look at numbers. 200 million of dwellings have to be retrofitted in Europe. And in emerging countries, the dwelling needs per year is around 3 million for countries like Brazil, Indonesia. So probably in the next 20 years, we have to build most of our countries. So I will go with Nathalie. I think SME are crucial. If we want to look at the European problems, we need workers, we need knowledge, we need to finance this, we need immigrants to work in the real estate sector. We need people to come, and I hope also on a political class that is open-minded and able to fix problems. Why we have to do this? I would like to repeat what I said a few weeks ago in Milan. There was a skeptical audience on energy efficiency. You know, now it's why we need electrical cars. I mean, things like this. I say, ladies and gentlemen, I mean, let's think why we are doing all this. Why the Green Deal? Well, if we want to look at the little garden of Europe, only here, every year in our continent, old continent, 400,000 of people die as a premature death. People that were not supposed to die, cancer, other things, because of pollution. And our houses are polluting 40%. So if you don't take initiative, and we were in Milan, I said, being Italian, I played a bit around with this. I was born in Rome, so there is a bit of rivalry. I said, well, people living in the region of Milan, actually, they live 14 months less than what they were supposed to live. So because of the pollution, you lose 1 year and 2 months in average. Now in Sicily it's better, it's 5 months, and in Rome it's 6 months. But anyhow, I mean, we have to change the mentality of people. It's not that, I mean, because electric cars are using electricity, they clean our air, our city are polluted. We smell, we breathe this area. So every heating system changed and replaced is more chance to have a better life. Not for you, because probably you don't care about you, but for your kids. For your kids are much shorter than you. They breathe, and if you look at the number of cancer that are arriving, it's very scary. So we need, it's a bit dramatic, sorry to say, but we need to tell people why we are doing this. It's not just because we are green freak and we are, no, it's economical reasons. We want to grow, we want to give opportunity, and we want to allow everyone to have a better life. And I think that's the best opportunity we have to change completely the paradigm and become a union for the first time, and also giving a better chance to people to live in a better way and give hope. And hope also to have a lot of immigrants that will have a better future in our continent. Thank you.
And now comes the boring banker, lobbying for a lower or less regulation. As you all know, for us, the scarcity is, or the limiting factor is capital, measured by risk-weighted assets. And if we want to lend out a transformational loan, and as I said previously, we are relying on the cash flow. That meant the cash flow over the renovation period is 0, and the property value also goes down. The lovely regulator asked us for 150% risk weight. And that's something which is a big topic for us, either on the new business or existing portfolio of the existing real estate with bad energy efficiency certificates to improve, because that's a high risk for us. And we want to do that, and it's absolutely clear that we have to do something on the transformational path. We cannot solve the issue just by financing new buildings, so you have to move the existing property, and therefore we need less regulation. That is something what we pushing for.
Thank you. So when I set up the $1 billion fund, I was subject to a lot of lobbying from peak bodies. The first thing they said was, don't give out loans, make this $1 billion grant. And I heavily debated that, because grants can only go so far, and also if the government changes, that grant could disappear. So I said no to grants. And then, you know, I'm left with the loan program, and the lobbyist said, appoint my member to run your program for you, we'll distribute your loan for you. And I said no, because that will not drive innovation. And to help rapid transition, we need innovation. So by working with private banks, many of them, we can drive innovation, one, in competition, and two, actually in these home energy advice platforms, which thankfully I'm seeing a lot of them springing up now in Australia, and they're using technologies, AIs and different smarts to overcome this scale problem. So what I really hope is that AI, digitization and scale can come together to help transition so that we're not relying on physical workforces. Thanks.
Thank you as well. Did any member of the audience think of an interesting question for our panelists today? You can raise your hand. Okay, one in the back, one in the front. So we collect those two questions and then we can wrap up almost on time. Go ahead, sir.
Yeah, thank you for the interesting discussion. My name is Sebastian Canero. I'm CEO of Solas Capital, and we run a project finance strategy to decarbonize buildings and industry. And I wanted to reply to your question if there are any innovative approaches to energy efficiency, because we have heard a lot about mortgage financings, but there's another sector which is the energy efficiency as a service business model provided by energy service companies. And I was wondering, Grace and Nathalie, do you see this model also in the regions where you are active? Because here in Europe I can see more and more of those kind of projects, which is very promising and a very good business model also to help SMEs to do energy efficiency upgrades.
No, yes, we've been seeing those models. There is a risk component which is tricky still in the regions we are working in, and we've seen that working quite well with public and municipalities, so publicly owned companies and municipalities, where there is like a lot more certainty on the cash flows, and therefore those entities or service providers can finance the project and then sell the EPC and refinance themselves. So yes, we've seen this model, but the uptake on the MSMEs is still relatively low. However, through the financing program we were discussing, we are pushing that model to outsource basically all the cost and the risk of those projects. But I think it's important to also see a bit of background. Like in a lot of our regions, project finance is still such as at infancy. Like when a loan is being given for project finance to a corporate, it's usually heavily collateralized, like more than 100%, and they don't look necessarily as a credit risk of the entity. The bank is not necessarily looking at the overall credit risk of the entity. They are just asking for a huge amount of collateral. So we also have a lot of work to do on the non-green aspect and more the financial components and the way the financial system is working. That's part also of the policy work we are doing, and the wider development work we are doing to push those economies to a more market-based type of mechanisms. But yes, to answer your question, those are things that we are heavily looking into. Grace?
I'll just talk briefly. Yes, thanks for the prompt. So I am seeing quite a lot of energy as a service propping up in Australia for individual households. And it's fantastic because home loans are for people who own a home. So there's people who don't own a home, or they actually don't have the cash flow to borrow and they're left out. So energy as a service is fantastic because in Australia, it's like a subscription contract where you pay off in installments, and that helps a lot of people such as renters, retirees who own their home but can't borrow, access these home energy technologies that they otherwise wouldn't be. So it's fantastic.
Great, and I think there was another question. Oh, here, go ahead, sir.
Yes, hi, I'm Adrian, I represent the space asset management industry. And I have a question for Dirk. Maybe first a comment, even here we know Bamberg, it's a nice place. But the question to you is, I perfectly understand your risk framework, you laid out the criteria for giving out loans, but don't you lose business to competitors who have a less stringent risk framework?
And that's a very good question, and we have a big debate about it. It's also one of the reasons why we just implemented the pricing mechanism. As said, 2022 we have with the CREM decarbonization pathway, and we implemented in this year, second quarter, the pricing mechanism. And it's actually one of the big reasons that we have a strong discussion with our distribution part, that they have been because they also get remunerated by how many loans you give out and the earnings. And there has a big discussion, and we said in the end that the pricing, the gaps, no? If you talk about energy efficiency label A and E, we try to, on the right side of the normal distribution, that you're not coming up with 50, 60 basis points spread, and then you would be out of the market. So this is something we do gradually over time, and I'm just waiting, probably the next week, we get the final first results, how the pricing worked, how was the feedback of our clients, and that's a very crucial point, that you're pricing the bank out of the market.
Maybe the idea of the label comes exactly for this, to create a kind of common level playing field where everyone knows exactly what are the rules to be respected, and as soon as you are out of that kind of rules, I mean, you are not marketable. So the idea of creating common rules, it will help the market to be a bit more efficient and also avoid any kind of, I will say, free lunch for someone in that situation.
Okay, I think we have one last question at the back of the room, and I would just ask everyone to be brief, asking and responding, and then we can wrap up. No question anymore? That's fine. Okay. Well, first, thank you for being such a nice audience. I want to thank the organizers for putting this event and session together. Energy efficiency should be part of global roundtables always. I want to thank our speakers who provided honest opinions about the situation with the energy efficiency market. Stay here for the next session on just transition, and have a wonderful day. Thank you.